Well, it's clearly a day for the Eurozone with a number of rate decision announcements today, including that of the ECB's. Well, as part of our Euro theme, I thought it would be a good opportunity to open up a few areas in the EU not always discussed in length, or at all for that matter. Today, I'm looking at the financial highs and lows of Eastern Europe, and I'm joined on the line by Markus Svedburg, Chief Economist at East Capital. Markus, thanks for joining me. Now, a number of countries in Eastern Europe completely re-examined and reorganised their budgets a few years ago. Is this something the likes of Portugal, Italy, Greece and Spain should be doing more of?
Yes, they should do exactly what the Baltics, especially the Latvians, did 2-3 years ago when they were in the middle of their crisis. However, I doubt they will. It's simply too hard a recipe for them, and we have seen that they have problems even doing much smaller consolidation. And I know that Latvia is sometimes, shown as a model for other countries to follow, and I think it should be, but I don't think it is. And I think the main reason for this is a different sense of entitlement. It's much weaker in the Baltics. People remember the really difficult times, whereas in Southern Europe, people just don't remember when things were really, really difficult. So yes, the Baltics should be a model, but it's not.
So why are Eastern European countries such as Latvia, for instance, perceived as role models, or rather examples, to their Western European peers?
Because there is really no alternative. At the end of the day, if you have overspent, the government or individuals or companies, you have to pay it back. And this is painful. And it has been very painful in the Baltics. But they've also shown that if you do this strongly and forcefully, you will be able to come back to growth. And actually, Latvia is currently the fastest growing economy in the EU. So they have shown that it is possible, but you need a broad political support. You also need, a social contract with the voters. And because when the Latvians did this, they were the government who did these strong measures were actually voted back in the parliament.
Let's look a little more closely at Eastern Europe. Do you think this part of the EU has much more market potential than it does currently? And if so, are countries in Western Europe holding it back in any way?
I think so. In one sense, Eastern Europe is being held hostage by Western Europe, if we're looking on equity markets, but also on private equity, because a lot of capital is coming from Western Europe in terms of foreign direct investments, but also in terms of equity investments. And when you have all these problems in Western Europe, investors tend to take the money home, close to where they are living. Even though you have problems at your home markets, you tend to become risk averse, even though I don't agree with this assessment of risk, because you should be investing in countries that have done their fiscal consolidation, that are actually growing, and that don't have much debt. And within Europe, that is certainly in the eastern part, and also the further east you go, the better the situation looks.
Finally, Markus, we've seen political wranglings getting in the way of many things in Europe, not just market confidence. To what extent is political spin affecting markets in Eastern Europe? And is there a similarity at all to, say, that of the PIGS countries?
Well, I think that, certainly lately, politics have played a big role in equity markets. The lack of political action in Western Europe, hesitant in Southern Europe to do the things that they ultimately have to do, but also political issues in Eastern Europe. So they're not necessarily similar, the kind of issues that are dominating the discussion, but politics is certainly playing a big role also for equity markets. And some Eastern European governments can certainly do more to become more investor friendly, to communicate the good things they do in a better way. I think Russia is an obvious example. But then there are also examples of Central and Eastern European countries that are looking very solid politically, and I think Poland is perhaps the best example. I would say that the Polish government, certainly in terms of economic policy making, is one of the most attractive in the EU. Even starting to challenge some of the Scandinavians. because they did really well in the last economic downturn, and they're looking quite solid in this economic downturn as well. And they've done a lot of positive things in terms of difficult things like pension reforms and fiscal consolidation and so on and so forth.
Okay, thank you, Marcus, for joining me today. As part of our coverage, my colleague Darren McDermott has the latest on that all-important ECB meeting, so keep checking back when you can here on Dukascopy TV for that and for other updates and exclusive interviews. Until next time, though, goodbye.